Hello everyone and welcome to Day Trader S&P 500. Today is Monday, October 17, 2022. This is Dale Woodson, editor of Woodson Wave Report. We want to get all of our YouTube subscribers caught up with what's going on in the markets. Exciting week, or it could be. We'll see how it plays out. We're going to start as we usually do with the Qs. And you can see we're looking from that B wave high on 816. We've got a 1 down in italics in black, a 2 up, which was a 50% retracement. And you can see we've got a 3 and a 4 and maybe a 5 and maybe not. We'll see. Maybe 3 is still going. I don't know if you can see this black line here at 270.10. That's where wave 3 gains equality with wave 1. And you can see down here we've got the 1.272, which it reached. The 1.414, it went in right between those two. And then the 1.618 down here. Those are the multiples for this wave 3 here. Okay, so we could anticipate 3 extending all the way down to here. Then we get a 4 up, and then we get a 5 down. Okay, so we've got a couple different wave counts that work. It just depends on this third wave is still going to extend further or not. It made a 1 point, well, but in the Qs between a 1.272 and a 1.414. So that's what we're looking at. If 3 is here, and then that 4 was almost a perfect 382, and then we got a 5. As you can see, the 382 is there, and then we'd get a retracement of this 5-wave decline here, and that would put it roughly right about there with a 382 at 276 for the Qs, 50% at 283, 618 at 290. So that's what we're looking at in the Qs, and for what it's worth, we've got that same situation, if you will, with the internal third wave. Is it still extending or not? We'll get into that in a little bit. We want to touch base on the US 10-year. You can see we've got a daily chart here. We're looking at that last 5 waves in blue. We got a 1 up, 2 down, 3 up, 4 down, and a 5 up. You can see our Fibonacci targets there at the 3.868, which was achieved. The next one is the 4.434%, which is a 1.272 extension. And we have the other ones up there. So we're watching that play out. As always, as people are learning and finding out, interest rates are important. Okay, let's get to the S&P 500. This is a daily chart, and here's where that 3 is again. This is the cash S&P, and you can see here we have 5 waves down in black for the A in parentheses, 3 waves up for the B in parentheses, direct hit on our price and time targets to the penny. And then we've got a 1 down in black, a 2 up in black. I got the 3, 4, and 5 sitting up here. Again, this 3 gains equality here. It reached it. A 1.272 here. It reached it. And a 1.414. It was at 3,500. It made 34.91. So it reached it on the 13th and it moved up. We could call 3. There's a lot of different ways you can label this. 3 here and 4 there and 5 there. That's why I left them here. You could call 3 not yet complete and expect it to get to the 1.618, and then we'll get a 4, and then we'll get a 5. We'll see how that plays out. You can see our 3 targets here, 36.81. It's achieved. The 1.618 is down there at 34.10. Again, these third waves, this is a third wave. A is the first wave, B is the second wave, C is the third wave, and we've got a 1 down, a 2 up, and a 3. That's why I'm leaving that open, because I've seen these sell-offs before, and these third waves are strong and most powerful and can take on any Fibonacci extension they choose. Usually they choose at least a 1.618, if not a 2.618, or even a 3 or a 4. So we'll see how that plays out. Let's look at the hourly. That one was a daily there from the August 16th high. We've got a couple different ways we can count this. 1 down, a 2 up, 3 down, 4 up for 5. There's the retracements. I like this one. This would have a 382 retracement to the previous 4th wave of 1 lesser degree of trend. that would be normal, and we'd see an A up, a B down, and a C up. Don't know if we have that on the S&P. I think I got it on the ES though. But if I can draw that here, and then I know I've got it on a pick or even on one of our reports the last couple days. We had a couple that we put out today. There's that ABC. Yeah, you can see that this isn't exact. I think I got that a little bit too low. There we go. See that right here is where C gains equality with A. Let me mark those for you guys. Okay, let's get an A, B, C out here. We get an A, a B, and a C, and that's too big a degree of trend, but I don't know if that matters. Let's make it minuscule, the lowest degree right there. That shouldn't be an alt because that would be 1 of C. Then we'd get 2 up, and then we get 3 of 3 down on the C wave. That's the B up. That's 1 of C. That would be 2 of C, and it could go to any of these targets in red, and then 3 of C, which is basically a third of third wave down. Let's look at the E-mini futures. I got a lot of stuff on here. All the prices and times are in purple. The wave count, at least from the all-time high, is in red down here. And then we've got, that makes the larger wave B. Then we've got the larger wave A down, larger wave B up. And then we've got a 1, 2, and again, I got that 3, 4, 5 in there. Again, there's a couple different ways you can label that. We're going to have to watch this play out. But again, that could be 1 of C, and then we'd get a 2 up, and then we'd get a 3 of 3 down. So we're on the verge of a 3 of 3 down. We'll look at our time parameters here shortly. Let me see if I can look at that. Here is that August 16th high. Again, the 1 down, the 2 up, the 3 down, the 4 up, the 5 down. There's the retracement targets for the larger wave 2 in parentheses, if that is the larger wave 1 of C. Again, that B is a second wave. This is 1 of C, which is a third wave. We're in wave 2 up now. Wave 3 of C, which is basically a 3 of 3 wave down, is just about upon us. Let me see if I want to break that down into a 10-minute bar. That last high, we've got a 1, 2, 3, 4, 5 down, and again, 3 waves up. We'll see where that goes. I want to show you guys a few things here. Let's get into our Fibonacci time spiral report that we put out. I believe that was early this morning. You can see our wave status there. See what we have here. By the way, we are moving at the end of the month. Might be down a few days there, but we look at price, pattern, price, and time in that order. When they all come together, it's a beautiful thing. Here is what we just went over in the S&P cash daily bar. Okay, within wave C down, wave 3 is currently between the 1414 and the 1618. Okay, there's all of our targets here, and there's the targets there. I wanted to show you guys. Oh yeah, the Fibonacci time spiral. What the heck? That's why we're going here. Okay, started this back in the 90s. I always started from a high, looking for the low 55 days later. I think this was the first one I did back in 1999. To this day, I call that 824.99 the orthodox high. Why? Because the market turned on this high for at least 6 years, if not more. It didn't turn on the actual high of January 14, 2000. You can see there we had our daily bar. I think that might have been the weekly. What was that? Yeah, but it caught this low 55 days later, and then it made a new all-time high, and it caught this low 55 days later, plus or minus 1 day. I'm not sure. It's down there in the details, okay? And then if you can see here, which was amazing, it's still amazing 20 years later, 22 years later. The slippage on this, how many days it was off, the slippage formed its own Fibonacci sequence within the larger Fibonacci time spiral. First one was off by 1 day, then 3, then 5, then 8, then 13, then 21. These things are just beautiful to behold. But anyway, I want to show you guys that for reference. And here's where that daily, again, caught that low, caught that low. The key is I was always starting spirals from a high, looking to catch the low 55 days later. Worked out pretty well. Then I expanded that daily chart into a weekly over time, and look at how it did here. It caught all these turning point highs. Did it catch them all to the day? No, but it went all the way out to 2006. Did it catch the lows? No, but it did a really good job of identifying the highs. Imagine what you could do with that, and that helped us with all those timer digest ratings over the year rankings. And I even extended it out even further all the way to 2018. And you can see there it caught right in the expanding triangle. Higher highs, lower lows. Okay, that actually started in January of 2018 and bottomed at the March pandemic lows in 2020. That was the expanding triangle wave 4. This is a bigger picture. That'd be the wave 5 up there. But that's how that works. And that brings us to this Fibonacci time spiral. I don't know why, but for the first time in my life, I started the sequence at a low. Again, I was always starting at a high, looking for the low 55 days later. Worked out really well. For some reason, I did it here, and the slippage over, what is it, a year? March 3 to 10, over a year and a half. The slippage is 1 minute. I remember when this happened, had a turn date of 428. It opened on 429. The open was higher than 428, and that was lasted for 1 minute. The next minute it went down and it continued down. So that caught the high within a minute. This calls for October 23rd turn date. That is a Sunday. We're looking at Friday the 21st to Monday the 24th for the next turn. And there's that crash alert that is still out there. I want to let you guys know there's no guarantee of a crash. A crash is a very rare event. But if one is to occur, that's the perfect time period for it to do so. What we need to see is weakness into Wednesday, okay, and then well, here, I'll just read what I put here, the blueprint, because I've seen these over the years going back 87, 1997, 98, 2000 to 2002, 2007. We need to see a considerable weakness on Wednesday, followed by a lower low on Thursday, leading into crash day Friday. And everybody thinks that's the crash. It's a huge down. And then lo and behold, Monday comes along and it's an even bigger down. And then what follows from there, if this follows the same scenarios, then Tuesday would be a lower low intraday. And then during the course of the day, it would just bounce up higher and a reversal would turn around Tuesday. No guarantee that's going to happen. That's the blueprint based on what has happened in the past. Again, there's not even any guarantee that the market it could go up. Okay, but if it's going to crash or make a panic spike low, that is the ideal time for it to happen. If you haven't traded one before, don't do it. It's dangerous. I've done it. I've traded them many times. I enjoy it, but there's going to be huge whipsaw. There's going to be huge counter trend bounces, rip your face off, counter trend rallies in the middle of the day, and if you're not ready for that, don't go there. It'll eat you alive. Okay, let's see what else do we have here. Oh, I wanted to get into the 1 minute. See, I wanted to look at this decline here a couple different ways. So to analyze this, what are we looking at? Is this 1 of 5? Is it that 3 extended? There's a lot of different valid ways to count this, but I want to look at this move up here and see what it's doing. If we're right, we got a 3-wave counter trend bounce higher. So let's look at that. Let's get down into the 1 minute from that 3502 low. We go to the 3502 low. It's down here. Here's an A up. There's a B down, and look at that. It hit right on the 618 retracement. There are no coincidences, right? And then there's the C, where C equals A at 38.22 and a quarter. And if we go back here, that is right near our 38.17, 382 retracement. As you recall, 4th wave of 1 lesser degree of trend. In a Fibonacci perfect world, that's what happens. This thing goes up into Wednesday, tomorrow, hits in there at 38.22 to 38.17, somewhere in there. It could go all the way up here. And then it turns around Wednesday's low, Thursday's lower, Friday's huge down, and Monday's huge down. We'll see how it plays out. Should be exciting times. we'll see what happens. Okay, and until next time, take care, everyone.